Gary Black believes that Tesla stock will 7x in the next 10 years. That excludes robotaxis. We'll dive into the numbers here, as well as I will give you some of my thoughts and some of my numbers as an all-in Tesla stock investor in my stock portfolio. I believe Tesla stock will at least 10x before the end of 2030, and really, it's going to be more closer to like 15x. My projected stock price of Tesla stock is over $3,300 per share. So let's dive into the numbers. Gary was comparing his numbers with Ron Barron. Ron is a billionaire. And Gary, actually, let me show you this. Let me show you why you should pay attention to what Gary Black has to say. Is it because he went to Harvard and Wharton School? Well, not necessarily, although that's great. I was actually going to go to Harvard. And then I started doing really well with my e-commerce business, so I decided I don't even want to try going there. It's not easy to get into Harvard. And that brings me some memories. Gary, at Aegon, he used to manage 450 employees and $120 billion in assets, representing a third of Aegon Asset Management's assets and 50% of the profits. Now, $120 billion, that is a lot of responsibility, not easy to do. So when someone like this says Tesla stock will 7x without robotaxis, without robots, without energy, without Tesla insurance, I think we should pay attention. And that is why Gary Black is quite well known. I mean, you look at the amount of followers he has on Twitter, it's a respectable amount, and people pay attention to what Gary says in the Tesla community. We're going to start getting into the numbers now. So it all starts by comparing Gary's numbers and Ron's numbers. So Ron's and Gary's projected Tesla stock price in the next 10 years is exactly the same. It's basically identical, but they come to it differently. So it's important to look at those and then look at your model, what you are projecting, and see how that compares to yours. It is important to get all of the scenarios into your model. So Ron expects $4.5 trillion market cap, which would be a 7x from where we are today. That's over in the next 10 years. And Gary says is quite realistic. Ron assumes 20 million cars at $50,000 average selling price at 30% operating margin. That's $300 billion operating income. And then we give that a PE ratio of 15. And that's how Ron gets his $4.5 trillion. Most importantly, this excludes robotaxis. It excludes energy. It excludes bots, of course, except the core EV business. And that is important because if you have any trust in Elon Musk, if you think that he is generally a good person, which to me, that is obvious because I know I am a good person and I can relate to Elon wanting to do better, and I can recognize that. I think a lot of people that are more skeptical, where maybe, you yourself, if you cut corners, let's say, and then your first impression is going to be negative. You will always look for negatives first. But for me, I trust Elon Musk. I don't think he ever purposefully misleads anyone. And he says full self-driving, it's 100% going to be solved. 100%. There's zero hesitation. Absolutely zero. So to exclude robotaxi and still have a 7x from where we are right now. I was thinking 3x before Tesla stock dropped so much this year. So now it's getting much more attractive to invest money in Tesla stock. So to have at 7x without all those innovations, it just makes me so much more excited about Tesla stock, because nothing is guaranteed, of course, and not financial advice. But to me, this is as safe as it pretty much gets with a single stock when looking at the risk and return. Here are Gary's numbers, and we're going to get into the spreadsheet as well. Gary is only projecting 10 million deliveries, not 20 million. Ron basically is going with what Tesla's guidance mostly is. Gary, not so much. And then Gary's projecting $42 per share in terms of earnings. And interestingly, we have a 30 PE ratio, not 15 here. And that also results in 4.5 trillion market cap. So same price. Let's get into the spreadsheet now. So first, let's start with EV adoption percentage. So by 2030, Gary believes EV market share is going to be about 60%. And I think in 2030, you are not buying an electric car only because you cannot get one, or there's some sort of weird charging station where you just cannot charge your car for some reason, which I would find that hard to really imagine in most cases. But if you live in an apartment, let's say, and they haven't installed chargers, that might be a little bit of a hassle if charging speeds are not exactly very fast. So, but for anyone who can actually charge their car comfortably, easily, simply, everyone is going to be buying electric, because probably gasoline cars are going to be much more expensive from day one to own by that time. Because think about this. You are taking away market share from all of these internal combustion engine vehicle manufacturers, and that is going to shrink their margin. So they will have to increase prices, but the prices of EVs are coming down. So it will be not a good decision to go not with an EV. So we're assuming 60% EV adoption, and Gary's only giving 20% of the EV share to Tesla, which is not very high. I think they can go higher than that, much higher than that. And only almost 11 million deliveries in the year of 2030, with average selling price of 64,000. Gross margins almost 33%, which are pretty good margins. And then this is when Rob Maurer talks about Tesla's operating leverage. This is what he means. So let me zoom this out. So see how the gross margin in 21 of Tesla was already 27%, but operating margin is 12% only, because, Tesla still needs to spend a lot of money on research and development, for example, and on gigafactories and other things like that. But later, those costs, research and development, for example, that won't really go up. And we will already have built all the factories for most of them. So the operating margin is going to grow for quite a while, even though the auto gross margins are going to stay basically the same, even if they do stay the same. But I think there's a good chance these are going to continue growing, maybe even above these numbers. Perhaps, maybe, just maybe. We'll see. And then if you follow Gary's numbers, you get $180 billion net income right here. And if we use today's Tesla's price of $240 per share, and if the stock doesn't do anything at all, in the year of 2030, Tesla would have a PE ratio of 4.9. Now think about this. 4.9. Let's say the stock doesn't do anything, and let's say these numbers become real. Right now, Tesla's market cap is how much? It's under $700 billion. So if Tesla paid out all of its net income, you're getting some crazy yields, way more than 10%. more than 15%. Now, of course, there are taxes and everything, but these would be absolutely ridiculous numbers. Now, these are Gary's numbers. How do I do my numbers? Let me show you in just a moment. Here are some very simple numbers that I present when someone asks me, Matt, why do you invest in Tesla stock? So I'm not going to show you a complicated spreadsheet, which I personally prefer those, but I know most people don't really like looking at those. So for the rest of you, I'll show this to you, and if you guys really want me to go into high detail, I'll make another video sometime later. But this is, when someone asks this, everyone understands this explanation. So in 2021, Tesla made $4 billion profit. That's excluding regulatory credits. And the only thing you need to look at is they made about less than $5,000 per every single car delivered. This is the important number to understand this model. In the first quarter of this year, Tesla made $10,000 profit per delivery, more than that. Now, then you have to ask yourself, how many cars do you think Tesla will deliver? I think it will easily be the world's #1 automaker. So when I look at my conservative projections, number one thing that I look for is give me everything, give me all the numbers based on everything that has already happened. Don't give me numbers that are dreams that we haven't done yet, that we haven't proved are actually possible by actually doing it already. So that's why I'm going to base profit on this number. And then 10 million deliveries. Now, we will have cheaper models, but also we will have a Cybertruck, which will increase average selling prices. So I will keep $10,000 profit per delivery, because also Tesla is going to be ramping up 4680 batteries and the giga castings and removing all other parts from the car that are not necessary. I expect the profits to at least stay at this level. So, and then the reason why 10 million deliveries, a very simple reason that I would give to anyone who's not familiar with Tesla. Give me biggest automakers. Toyota, Volkswagen, roughly 10 million deliveries per year. The car market has shrunk since the bad cold that the whole world got. But before then, 10 million a year is not something impossible. So, and I expect Tesla, clearly they have the best cars and they can clearly scale. So 10 million, that's easy, I think, personally, my personal conviction. So then what do? Is we take 10 million yearly deliveries, we multiply that by $10,000 profit per car, and we get $100 billion profit per year. Then the way companies are valued is you look at the profit, which is earnings, and then you ask yourself, what is the multiple? How many times the yearly profits am I willing to pay to own this company? And a 20 multiple is pretty standard if you look at the market. Let's say S&P 500, 20 multiple is not a very high multiple, really. I mean, it's not low, definitely not low. Now, the car industry, however, is quite a bit lower. For example, oftentimes they are, 6, a 5, even a 4. Toyota was higher, though. But you look at most of them and they are pretty low. However, Tesla is not a car company. But even if it was, let's say, it is a car company, then it's a 6.5 PE ratio. This means from today's price, if all these numbers come true, I lose this much money. 0. I don't lose anything. And this does not include energy, Tesla energy. This does not include batteries. This does not include Dojo as a service potentially. This does not include robots. Of course, definitely no humanoid robots in this model. And this, most importantly, does not include full self-driving. Even right now, when Tesla sells FSD packages, they cannot recognize all of the profit. They can recognize some, but not a lot of it. So these numbers that you see here per car, these are all basically before FSD, before full self-driving profits. And full self-driving could easily increase the value of profit that we are getting per car by at least 10,000 minimum. So you can just easily at least double, like it's such an easy doubling here. And it really, I think that's where my expectations come in, where Tesla stock would at least 10x. So I want to be able to hold Tesla stock without losing money, even if full self-driving doesn't happen, which I'm convinced it will happen. So in the worst case scenario, I'm not losing money. Most likely I'm making money, like a pretty clean 3x. This is like a very bad case scenario, and this is like impossibly bad case scenario for me. And then FSD is where I would expect that 10x for me to come in. Tesla is going to charge a lot more than $10,000 for a full self-driving option. They are already charging a lot more than that. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Postius, reporting to you from Vancouver City, Canada. I'll see you later today. Thank you so much for watching.